and welcome to this edition of Closing Trades. And it's going good. Got a good leg up from the global cues this morning. And that said, we're holding up a good 250 points higher, 1% up in the green for the benchmark index. And the breadth of the market as well is looking very strong. Just within the F&O universe itself, it's a count of over 200 that you have to the greens, with just about 14 stocks languishing in the red right now. It's, that same leadership set of stocks which are actually taking the lead today as well. Look at the top mover on the Nifty, M&M, higher by 3%. This Tata Motors, of course, which has made a good comeback today. There's ICICI Bank higher by over 2%. L&T is higher by nearly 3%. Hindalco is looking smart. Shriram Finance as well. Couple of these Adani names led by Adani Enterprises as well, not looking back. Kotak is looking very strong. Asian Paints is seeing a bit of a buying or rather rebound. Hero MotoCorp, Titan, Britannia, BEL. These are all names which are seeing some good gains. Within the broad end of the market as well, it's Policy Bazaar higher by nearly 7%. CAMS is looking smart. Zomato has made almost a 6% dash. It's back at those 215 levels. Paytm, Poonawalla FinCorp. These are all names which are seeing a significant amount of shades of green.
Yes, absolutely, Aisha. Significant amount of green on the screen. Take a look at Varun Beverages. That particular counter is in focus on back of the fact that Citi has come out with a positive note, and due to that note, and you can see the stock rallying about 4% or so. Apart from that, take a look at Paytm because you have a Paytm, a 197 communication saying that Paytm Money has been registered as a research analyst with SEBI. SEBI has approved that sort of an registration. So on back of that, your Paytm also seeing good gains. LIC CEO has spoken to ET now, saying that they're planning for a health insurance foray, and that is in the final stages. So you have LIC also seeing good gains of about 1.5% or so. But is this shade of green here to stay? And should we all be very excited, hoping that this sort of a move continues from here on? We have Kunal Bothra as well as Devin Choksi joining us on the show to talk about that. And Kunal, great day coming in for the markets. We're only building on to gains, and hopefully we should shut shop around that 22,800 mark.
Well, absolutely, yes, Cheryl. And I think, for example, in the morning I called that this could be a breakout day for the indices, both for the Nifty as well as for the Bank Nifty. And I strongly believe that such kind of price action move, generally earmark the indication that the trends could probably have reversed, at least from a short-term view. And the prime reason for that was, when the markets was selling off in the last couple of weeks specifically, there was a down gap which was created. That gap was around the 22,700 mark as a resistance. Now, when the indices open with a gap up and it tries to break the previous down gap on a positive note, that generally indicates that it's a strong breakout day for the indices where the trends reverse for the index over the near term. Now we are looking at a point where the index should be able to retest the 50 DMA at least over the very near term. That should propel the index back again above the 23,000 mark. So which means we should be seeing a further leg of up move for the indices even over the next couple of days, and I would anticipate that 23,000 mark should be breached potentially in the next couple of days itself.
Devin, we are almost on our way to a 1,000-point recovery on the index from the lows. How believable and sustainable is it looking to you?
Yeah, Aisha, good afternoon. Well, I think the question should be asked, I think, why it should sustain. I think the most important part, technically, market has been in an oversold situation for a long period of time. And that oversold situation was continuing largely because of the constant selling by the FPIs. Now, the selling of the FPI has muted. It has come down to a greater extent, largely also with the fact that the currency is also not depreciating now. On the contrary, I think it is showing some signs of stability because even the current account deficit situation is working in favor of India currently. So all in all put together, I think currency is stabilizing, which is stopping FIs from selling. And at the same time, I think the short covering led rally, which we are currently experiencing, is driving the market indices up today. In my viewpoint, I think if the recovery matrix has to be studied further, I believe that whenever the market has made panic bottom in past, in following 3 months to 9 months or 12 months time, the market, some of the stocks would give a very smart recovery as high as 70 to 80%, I think, and as low as I think 25 to 30% in most of the cases. So should that particular trade hold this time around, then somewhere I think the 21,800, 21,900 kind of a level which Nifty saw in a few days back, I think market should have a recovery back to 24,200, 24,800 kind of levels.
Right. So hopefully we should be able to see those levels very sometime soon. And given the fact that now you're also seeing the rupee also strengthen, remember that the rupee on an intraday basis today has actually hit a highest level in a month. So that one also is having its positive impact. Devin, I wanted to understand what's your take coming in on the metal space as a sector that one should watch out for. Do you think that this one will be able to build on to gains among the top sectoral gainers in trade today as well?
The reason to remain bullish are two. One, the energy cost is remaining under control. It is remaining low because of the lower crude oil prices. So that is a good omen for the margin for the metal commodity companies. On the other side, with the prospects of peace entering into the war-affected zones, suggesting that sooner there will be a reconstruction demand coming up from those countries. And given that kind of a possibility in following 6 to 9 months, I believe that I think the metal commodity demand will increase. So on one side, the top line, on the other side, the bottom line, both increases. And that's a sweet combination. Should that happen, then probably I think we are in for a smart recovery led rally in metal stocks. Maybe it's a beginning at this point of time.
Interesting. Okay, that's the take coming in on metals. Let's analyze some of the movers today. And you are seeing a good move on M&M. That's, of course, showing leadership and, in fact, leading the charge on the index. But Tata Motors as well has seen quite a strong rebound. Other than that, there's Hero MotoCorp as well. Kunal, we've talked about this, all through the market decline as to how M&M clearly had the leadership signs. Tata Motors took a hit. And, of course, two-wheelers was a different story altogether. If this market recovery is going to be sustainable, how do you see the composition of the Nifty Auto Index?
Yeah, I think there should be a mix of price action which should happen on both the leaders as well as the underperformers. And I'm talking of this specifically in the last 3 to 6 months, where M&M has managed to stand out quite strongly as compared to the other peers. So I believe that what happens initially is that when the market gets into a zone of confidence again, the most underperforming sectors, I think in this case it's auto and FMCG. So for example, from the auto pack, I would believe that the larger cap names are the ones which have been most strong. They initially lead up the charge for the auto index, and then there is a strong wave of outperformance which comes back into the underperforming names. That happens by legs of short covering or that steep mean reversion where these stocks have been divergent from their individual longer term moving averages. So I think that plays its part for these kind of stocks. But on the near term basis, I would believe that the higher return potential generally gets generated into these underperforming names. So which means that there could be a high potential trade over here that the likes of Tata Motors, Bajaj Auto, to a larger extent even Hero MotoCorp. I think these are the stocks which can probably rally by another 5 to 10% if the entire market setup improves over the next couple of days also.
All right, so that's the take coming in on the auto sector. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we will talk more about the market and stocks moving in today's trading session. Don't go anywhere. Welcome back. You're watching Closing Trades right here on ET now. The markets are near the day's highest point, where you have the Nifty now testing 22,800 mark. Remember that we surpassed 22,700 for the first time in 3 weeks today. Nifty Bank, that one is stealing the show with the gains of upwards of about 1.8% or so. That is okay, 1.7% uptick coming in for a Nifty Bank. Kunal? Nifty Bank definitely stealing the show in today's trading session. But do you think that this is the way how it is going to be? We should be prepared, irrespective of what everyone's saying. Yes, banks will lead the way forward.
Yeah, for a change, I think consensus this time around can work, because I think what's working in favor for the markets, and especially for the banking index, is the heavyweight private sector banking names. So it's the larger cap stocks which have been looking very strong in the last many weeks of the price action for themselves. I think that's a change which you're seeing for the market texture. And then when we look at this in terms of the relative strength as well as the performance of these stocks or the correlation of these stocks when market moves up higher, that generally is a very strong indication. Add to the fact that the next heavyweighted sector, or the top two sectors, the Nifty IT index is showing signs of a huge underperformance. So I think that's also aiding could probably aid the prospects of the Bank Nifty going forward as well.
Okay. You know, M&M, that's your top leader today. So let's hear out. My colleague Sumit Chaturvedi is currently in conversation with the Mahindra Group MD, that's Anisha. Let's listen in as to what he has to say.
There today, how India and New Zealand are planning to extend the ties.
It was a very warm meeting across all the CEOs from both India and New Zealand today, and that really complements the efforts being done by the government to enhance trade ties. The potential is enormous, and it was very good to see us being able to identify specific actions that can help us deliver that potential.
And FTA, 60 days, do you think it's a possibility, FTA, a lot of things can common between India and New Zealand?
We have a very dynamic Minister of Trade and Commerce, and he's done some remarkable things. So I should always keep faith in that.
And your company is in big way present in New Zealand. So you think India and New Zealand have great future when it comes to the trade ties, a lot of common things there?
I believe there is a very good future because there was a very strong set of relationships that we have as well. And Mahindra, of course, has a presence in New Zealand, both from an IT services standpoint and from an auto standpoint. So we look forward to doing a lot more with New Zealand.
All right, sir. Thank you.
Thank you.
Okay, we will cut across to the Piyush Goyal interaction as well, perhaps in just a bit from now. But that was Anisha from M&M talking to my colleague exclusively, and M&M clearly is your leader today, holding up just so smartly in trade. We've got Vinay Rajani too joining in at the show right now. Vinay, good strength for a second consecutive day. What are the levels now that you're monitoring on the index?
Yeah, good afternoon and thanks for having me on the show. So definitely it is a very good session. After a long time, we have seen breadth improving in a significant way, and whatever consolidation which was there for last 5-6 trading session, it has been taken out. The previous swing high, which was at 22,676, that has also been taken out. So that was nothing but the 20 days exponential moving average. And if I were to look at the present 20 days EMA, today's low is exactly to 20 days EMA. So that means the previous resistance is now a support for the Nifty, and it looks like that the way markets are performing today, the global setup is quite strong. It is there is a high chance that Nifty will reach to the next target of 23,200, which happens to be the downward sloping trend line on the weekly chart. So I feel this is a good breakout after a long time. Breadth was quite oversold. Many indicators, oscillators turned oversold, but the only thing which was missing in this market was the sentiment. And now after getting above the 23,700, we have got that confidence technically also. So the next immediate target for the Nifty is seen at 23,200. As far as support is concerned, I would keep a stop loss at 22,500. And yes, scenario is quite bullish. 23,200 is next target.
Right, so that's the take coming in on markets. Devin, let me come to you and get your take coming in on the defensive plays. You have the IT sector and the pharma sector. Both of them have a lot of significant exposure to the United States. Both of them actually moving divergently at this point in time. What's your take? If you have to place your bet on the IT sector or the pharma sector, which one would it be and why?
So in the near term, I think the bounce back is due for both. And maybe I think the higher preference will go towards pharma. Because obvious it is that the way in which India supplies to the US market, the generics and the specialty generics in particular, I think they both have an equal amount of, I think, the acceptance in this particular market. So from a perspective of looking at, I think, the tariff-related issue, this is not going to move the needle any which way, because I think the pharma is a basic necessity which is required in the society in USA. So to that extent, I think I feel distinctly confident that neither the price is going to change nor the duty structure is going to change beyond a point, and nor I think they can afford to stop the import of those medicines. So all in all put together, I think the subject which has started in the name of duty tariff structure, in my viewpoint, I think it is going to gradually get narrowed down in a due course of time. So should that happen, maybe the first choice should be with the pharma, and the second choice would be with IT, also because of the fact that Indian IT services is requirement as far as I think the solutions are concerned for any economy for that matter, and I think US in particular. So certainly, I think the kind of a short position that we are experiencing in the market in the near term, it holds the possibility of short-term led rally or the upside into some of these stocks.
Take coming in on some of those sectors. In the meantime, today's stars, of course, are some of these new age names of Policy Bazaar, Zomato, Paytm. These are all stocks which are holding out. Vinay, how are they looking on charts? A Policy Bazaar, Zomato, or a Paytm? Can you identify any trade at these levels?
Yeah, so Policy Bazaar is showing some strength, and today it is up by more than 7%. But the heavy correction we have already seen in this stock, and some sort of positive divergence I can see observe on the daily chart of oscillator. So yes, there is a good chance that along with the market, this kind of stocks can also witness some short covering rally. The next immediate resistance for the stock comes in around 1590, which is a positional target we can consider, because it's a quite strong setup on the charts, and positive divergence is there. So yes, one can trade long in the Policy Bazaar, which is looking very strong. The next target comes in around 1590.
Let's move on then to an Etina exclusive story. We are picking up from sources that businessman Ravi Deol may be leading a consortium of investors to buy whiskey brand Imperial Blue from the liquor major Pernod Ricard. Additionally, we also understand that the transaction will take place via Deol's in-brew beverages. Let me go across to my colleague Anurag Joshi for more on that. Anurag, over to you.
In-brew beverages, controlled by businessman Ravi Deol, is in talks with investors to set up a consortium to buy Imperial Blue, which is currently owned by Pernod Ricard, the French liquor giant. Pernod Ricard, that owns Imperial Blue, it has been seeking to find buyers for the brand, and Inbrew is said to have approached some private equity firms to partner with it for the proposed buyout of Imperial Blue. Inbrew is seeking to raise at least $200 million from the co-investor, which is likely to be a private equity firm in the deal, and the remaining amount, and this is at a valuation of $300 to $400 million for Imperial Blue, that Inbrew is proposing to pay. The remaining amount will be through bank financing. Now, Imperial Blue is among the top 5 biggest whiskey brands in the country, and Inbrew is led by Ravi Deol, and Ravi Deol was the first CEO of Barista when the coffee chain was set up in 2000, and he controls and Inbrew Beverages is owned by Inbrew Holdings Pte, which is Singapore based, and again that's controlled by an investment vehicle of Ravi Deol called Ahead Global Holdings.
All right, thank you so much for that, Anurag, for getting us those updates. But let's take a look at the markets, because you have Nifty that has reclaimed that 22,800 mark, and I believe, Kunal, for the first time in about a month?
Yeah, I think almost like a month.
Almost a month.
21st of Feb is where we were sub the 22,800 mark.
What's your outlook for the broader markets then? Because we are seeing a good steady recovery, at least stabilization when you talk about the benchmark indices. Nifty Bank also leading from the front. What about SMID? They are seeing good, strong moves, but is it sustainable?
Yeah, it should be sustainable. So I think as now the confidence brews into the market, there are bound to be points where mid caps and small caps would eventually make a comeback. But they are not the first ones which generally try to move up higher. So even if you look at the relative performance, both in terms of the price, absolute price levels for the mid cap index and the Nifty small cap index, these indices over the last 1 month, I think have been consecutively making lower lows for themselves. The only good part about the last 4-5 days was that the market breadth had started to improve. So we were at a point where out of the 2,000 plus stocks on the NSE, there was a point when the risk or the advanced decline ratio was skewed extremely in favor of declines. There was a point where I think 1:3, 1:5 was the average advanced decline ratio for the last many days over the last couple of months. That's started to improve. So when market breadth starts to improve, that's the first sign that the markets are nearing a short-term bottom. But as I said, the bottom initially starts off with large cap stocks outperforming. There are few sectors which tends to outperform, and once confidence comes back again, that's where mid caps and small caps would start to outperform. So I believe that potentially if we scale past about the 23,000 mark, the sentiment would start to become a lot more positive, and there, even if the indices stagnate for a couple of days, there I believe that the mid caps and small caps would stand to outperform significantly.
Right. Devin, in this recovery in the markets, other than banks, what do you think will do well and what do you think will continue to lag?
It's a time to buy the value frankly, the price correction in some of the stock has been so significant that I think the market almost forgot the kind of value at which I think they sold those shares off. So in my viewpoint, I think some of the companies which are in the, say, for example, NBFC space, which are in housing finance space, companies which are in manufacturing space where probably they are supplying to the segment like renewables and power utilities, or for that matter, I think the companies which are in engineering R&D space, where they have significantly large amount of business to execute in the given situation. They all look, I think, some of the brilliant propositions, I think, in the corrective downside. So maybe I think one will have to look at those values and the corrections in the price to buy them, and not for 3-6 months, but I think consider the opportunity available to you for 2 to 3 years from current levels.
All right, then that's the take coming on the space. Thank you so much, Devin, for joining us on the show and sharing your views on the markets. But Kunal, coming to you, what's your closing trade?
So I think in terms of closing trade, I would look at ICICI Bank as another interesting name. We were discussing this in the morning also, that the stock is due for a good price up move. Finally, it's started to show signs of that breakout, crossed about the 1300 levels today. Looks very attractive even at current levels.
Right, that is ICICI Bank for Kunal. Then, Vinay, what about you?
Yeah, so I'm bullish on NLC India, which is looking very strong to me. So Navily Lignite is the core. It has just surpassed the previous swing high and the 200 days moving average resistance also. Stock is looking very strong, currently placed at 239. The next target for the stocks, I think positionally should be 252, and the stop loss should be kept at around 230 odd levels. So I'm bullish on NLC India from this level. The another stock which I like is the NTPC. So NTPC, which is trading around 337, can be considered going long. So NTPC 337 is the level. 330 should be the stop loss. On the upside, I'm expecting a target of 350. So NTPC is the second pick from my side.
Okay, interesting ideas coming in from Vinay. We're going to take a very quick break. The market is building on even further. We'll continue tracking the last half hour of trade on the other side. Back with closing trades, and it's going pretty strong. We're at the high point of the day. It's a good 300-point move, made it back to that 22,800 mark. What's leading today, it's not just M&M, but Shriram Finance has actually overtaken M&M also, and it's the top mover on the index right now. Tata Motors almost sitting at a 3% gain. ICICI Bank has been a very strong show from the word go today, and L&T as well, which is smartly moving up another 3% higher as we speak right now. Important to analyze the laggards as well. Bharti, that's down about 1%, still holding around that 1600 odd level, but technology is not as strong. So even if you look at a TechM, for instance, that's languishing today. Wipro is at best flat. Some of the other names like a BPCL, Tata Consumer, ITC, they're also relative underperformers, I must say. And Reliance, look at that one, absolutely flat in trade today. So just not participated in today's market. It's actually spent the better part even seeing some dips in the red. And right now, it's just holding around the 1237 odd level. But Ashi Anand as well joins in on the show right now. Ashi, hi, afternoon. What's been the market strategy of late?
Hi, first of all, thanks so much for having me on the show. I think the market strategy of late is just sit and kind of watch what's happening in the markets. I think there are a lot of different moving parts. There are clear headwinds that we have spoken about. Growth is kind of weak. You have uncertainty around Trump. All these uncertainties kind of have led to an overall market decline. There are a kind of few green shoots that we have been kind of looking at. You've had the recent kind of quarterly GDP numbers which have come in at 6.2%, not great, but at least a big improvement over Q2 kind of numbers. Oil prices are down. You have seen some kind of reduction in the US 10-year bond yields. So I think the way we are really looking at the markets is we continue to be quite cautious. We probably believe that in the near term, the downside risks are probably a bit higher than kind of upside risk. But we are also cognizant of the fact that markets have corrected. There are certain kind of things which are improving on the horizon. So we are kind of going in, but we're kind of going in slowly as we're waiting to actually look and wait for the overall market environment to improve.
Right. Ashi, good afternoon. Cheryl also joining the conversation. And yes, we've had a lot of them talk about the fact that BFSI space, or rather the banking sector, is the one that is actually going to be the next set of leader. But I want to get your view on the BFSI space, because when you talk about financial space, there's so many moving parts. It's not just the banks that you're talking about. You talk about the NBFCs. There is capital market players also that come in this particular domain. There's insurance players also that come in this domain. What's your take? Which one do you think, or the sub-segments or the micro trends that you are spotting in the entire financial space?
Okay, sure. Yeah. So BFSI, right? As you indicated, there are multiple kind of sub-segments within that. I think the one space that we are very comfortable with, and I think a lot of other people in the market also see a lot of kind of growth and value in the space, is kind of banking. Now, within banking, if you're kind of breaking it up, you have some of the very high quality banking franchises, the ICICI banks, the Kotak, Bajaj Finances, HDFC banks. A lot of these are actually available at valuations that are lower than what they were available at historically. These are great compounders of longer term wealth. And actually, given the fact that valuations are cheaper than where they were earlier, they've become really an interesting time to kind of buy into something which you can just buy and hold over the kind of longer term and just see a steady kind of compounding in wealth. On the kind of other hand, in kind of banking itself, you have certain pockets where there has been pain of late. And specifically, if you're kind of looking at banks which have exposure to unsecured and microfinance. Now, this would include banks like an IndusInd, an RBL, and IDFC First. Some of these banks have had specific bank-related challenges, but the space overall has actually seen significant value erosion. Valuations are very, very cheap, and from a bounce back kind of play, buying them once kind of the pain finally settles, there could be a very interesting trading play in these kind of names. This kind of is the overall kind of banking, and it can also like just financiers, right? So banking or NBFCs. If you're looking at the other segments within kind of BFSI, capital markets is something which holds a tremendous amount of longer term promise. But for these stocks to kind of do well, you really need an underlying bullish market kind of environment. These stocks have done very well over the last couple of years. We are watching the space fairly closely. We have exposures here. We're actually hoping at some level that they do correct a bit more for us to be able to increase our exposures, because the kind of value creation you're likely to see in capital markets over the coming decade because of financialization of savings can be very, very substantial. The important thing to note is these are going to be cyclical, and if you're entering a bit more of a bearish market phase, they may not perform. I think the one other important space is clearly insurance. Insurance as a space has not performed for quite a few years now. Continues to hold a lot of attractive longer term kind of promise, and valuations are actually quite cheap. There have been kind of various regulatory headwinds, most of which are now factored in the price. So I think insurance is also quite attractive from a defensive perspective.
Interesting. And Ashi, what about tech right now? How are you, sort of looking at the landscape? Services, of course, on one hand, and the entire new age lot on the other.
Okay, so I think the simple one is the new age lot, right? So the listed digital platforms we see as the most attractive investment opportunity in India over the coming decade. I think markets are going to be surprised by the sheer level of growth and the ability for that high growth rates to sustain over the coming decade. And a large part of this is driven by very, very strong enablers that you have in place for longer term adoption of digital tech. The other thing is that I think market participants don't really appreciate the true longer term profitability of these businesses. There are large parts of the cost structure that are related to current hyper growth investments. These costs can actually reduce substantially as they achieve maturity. And we believe these companies are going to turn not just profitable, but highly profitable, generate very, very attractive free cash flows, very healthy ROEs, and this combination of strong growth and kind of profitability, we see as a very great recipe for value creation. What you've seen in kind of US tech over the last decade is what we believe has the potential to happen for Indian listed digital platforms over the coming decade. The IT services part of the story is a bit more different. What you do have here is, I think, a fair deal of confusion around what's happening with the US economy. Is Trump going to be positive or negative for the US economy? And I think as weeks kind of go by, that view keeps changing. And this is also more a nearer term call, right? Is there a trading play in IT services to play a bounce back of the US economy and IT demand coming out of the US? The slightly bigger problem of IT services is, I think, the longer term impact of artificial intelligence and the kind of potentially deflationary pressure this could have on IT services is something which is still kind of not very clear, which makes it a bit difficult to kind of give them very high premium kind of valuations. So while we do have exposures in IT services, we see that as potentially an interesting nearer term play. I think the longer term play is just clearly a lot more attractive in listed digital platforms.
So that's the take coming in on some of those names. But we earlier in the day spoke to Yashish Dahiya, who is the chairman and the group CEO of PB Fintech, where he clarified that PB Fintech won't be a majority shareholder in PB Health and will have a 30% stake. Listen into what he had to say.
PB Fintech is an incubator of the idea, but does not intend to be a majority shareholder or the owner of the company. So PB Fintech will have maybe 30% equity in the company for the 800 odd crores. Now, after this, PB Health will run its own business with whatever the 2,500 crores that it raises. At some point, it may run out of money. And then PB Health may say, I want more money. Now, arranging that money is the job of the PB Health board, the PB Health management. PB Health shareholder, as a 30% shareholder, has no liability to put in a single rupee more. As of today, I must also clarify, I don't envisage, of course, opportunities can change, situation can change, but I don't envisage PB Fintech ever having to invest anymore.
All right, so that's the take coming in from the management of PB Fintech. Vinay, let me come to you and get your view actually on the real estate sector. And the reason being is that this has been quite an underperformer of late. No doubt today it is among the top sectoral gainer, 3% up move. But real estate, do you think that it is beaten down enough that now it will only see a bounce back?
Yeah, there is a good possibility that it will bounce back from here, though it has underperformed in last 3 months. But looking at the chart, I can see there is a strong base around 800. I'm talking about the Nifty Realty Index, which is quoting at 822. So there was a strong support at 800 quite a multiple time. It took support there and bounced back. And today also it is attempting a recovery and sustaining at higher level. So the way market is reversing, I think there is a good chance that high beta sector like real estate can bounce back from here. So we can easily see 2 to 3% upside in the index itself from here, because most of the large cap as well as the mid cap stocks in the real estates are looking oversold on the chart. So a stock like Prestige, Godrej Properties, DLF are looking stronger at this point of time, and not if not reversal, but they are ready for the pullback from this level. So yes, I'm expecting at least 2 to 3% upside in the realty index, and stocks may go up by 6, 7, 8% easily. I'm talking about the large cap real estate stocks.
Well, the big story, of course, today is BYD and that new 1MW charging platform, which is clearly sort of all the rage right now, and it's clearly being marked and pegged as the tipping point in the EV industry. It can add about 250 miles on a 5-minute charge, which is almost as fast as literally filling up a gas tank, and sometimes even lesser than that. BYD is going to start building 4,000 chargers in China, but the question on the street is, imagine if it starts rolling this out across other countries as well, and what kind of dynamics would it really bring, not just for Tesla but for other EV players globally, and then of course the entire Indian infrastructure as well, given that BYD does sell here in India as well. But that said, looking at the auto pack, that's looking definitely charged today, be it M&M or Tata Motors. They're all holding up quite smartly. Reliance, like I said, still looking flat. Kunal, why is that? Just not participated, Reliance. Couple of brokerage upgrades came in. It sort of dragged its feet around that 1220 odd level, but nothing beyond that.
It has this tendency, Aisha. So in first of the market corrections and the best of the market times, the stock remains aloof in its own zone as such. So we tend to anticipate that that's the nature of the stock price, and it's always best to try and buy these kind of stocks, which they generally tend to move in their own tangent altogether. To when these stocks confirm breakout for themselves and breakout specifically of strong psychological mark. In this case, I think 1300 could be the first psychological resistance for Reliance Industries, and also I think technically it's a slew of resistances over the last 3 months specifically for the stock. So would not anticipate any kind of a major up move into the stock price. Even the volumes over the last couple of days have gone docile for Reliance Industries. So my belief is that the stock would probably move up higher gradually, but I think the real momentum would come back only once the stock crosses levels of 1300.
All right, so that's the take coming in on those counters. Vinay, let me come to you and get your BTST idea for our viewers.
Yeah, so one of the stock which I like is the Torrent Power. So it was oversold and has witnessed a healthy correction, but now it looks like that it is headed higher and it is closing above its 50 days EMA. So the stock is placed around 1372. So I like it for the BTST. You can keep a stop loss at 1350. I am expecting that overall positionally, if in the next 3-4 days it can achieve a target of 1435. But yes, for BTST also you can expect 2-3% gain from this level. So yes, Torrent Power is a good bet for the BTST.
All right, so that is Torrent Power coming in for Vinay. What about you, Kunal?
So I'll go with a couple of buy calls. The first one is one BEL. That's a chart which has started to look attractive, especially with a slight bit of underperformance in the last couple of days with respect to the other peers. So we'd look out for targets in the range of 300, stop us at 275. Bharat Forge is the other stock which I would believe is also nearing a very strong breakout. It's a consolidation breakout just about that 1100 mark for Bharat Forge. The stock is at closer to 1090 levels. So we'd look out for targets in the range of 1200, stop us at 1055.
Okay, that's the take coming in on some of those stock strategies. In the meantime, we're going in strong today, of course. I can't pinpoint a single sector which has actually been a laggard, although there are, some dots of red within the IT pack. Reliance, like we were just discussing, and Bharti as well is languishing today. But other than that, and of course, Bajaj Finserv, we're not really seeing many such laggards on the street right now. Sectorally, of course, it's all in the green in any case. This Chambal Fertilizers too, which is down today, and SBI Cards perhaps, but again, less than 1% of a fall coming in there. It's only Bajaj Finserv which really sort of stands out like a sore thumb in today's, strong market. But Ashi, do you think that, still very much, the concern in the market is what happens to US, what happens to the dollar move, and, what the anticipated Fed action could be later this week?
So yes, I would think so, right? I wouldn't overtly read into the current kind of market bounce back. The good part is over the last kind of couple of weeks, you have seen kind of days where international markets have been down quite sharply, and India actually wasn't down as much. And that's actually a bit of a reversal from what we've seen over the last couple of months. So there are kind of a few kind of positive signs here and there, but I think for the market direction to fundamentally change, you do need clarity on a few important elements. Firstly, and I think probably most importantly, right, how is growth going to re-emerge in India? You have currently both consumption and capex growth, both of which has actually slowed quite considerably. You need this to come back, kind of, and this is probably the utmost kind of or the most important factor. But apart from that, you also do very clearly need some kind of visibility of what's going to happen with the US economy, and importantly, trade policies coming out of the US, and also very importantly, kind of interest rates. I kind of think that the Fed may just be on a bit of a pause, because even they are kind of trying to understand what's happening with the economy as a function of Trump policies. So we don't necessarily expect a lot of clear news flow to emerge in the next couple of weeks, so which is why we kind of broadly believe that you are likely to remain in a bit of a volatile market over the next couple of months until you get some clarity around some of these factors.
So that's the take coming in on the space. But If you look at the market now, near the day's highest point, 1.5% uptick coming in the markets, 22,850 is what we are actually reclaiming. And Kunal, sometimes it feels like I just hope we are not jinxing it, because given the fact that any green on the screen, after a few days, you end up seeing the shade of red.
Yeah, so I typically say that more doubt is better, is a fuel to the market rally. So the more the doubt, the more the chances are that the markets would rally, because we tend to have a very short I would say memory as such, because we look at the recent past and then we anticipate that maybe the markets would probably want to mirror the kind of reactions which you've seen historically when there has been any kind of a breakout and those breakouts have been sold into. So I believe that this could be a good change which the markets would probably foresee going forward, and my sense is that we should see a further up move going forward.
All right, so that's the take coming in on markets. Vinay, what's your view coming in on the entire the pharma play at this point in time, given the fact that everyone's waiting as to what happens with the reciprocal tariff? There is somewhere a sense that it wouldn't be as harsh as one would expect, especially on the Indian pharma industry. So based on that, there are some of the reports indicating that you can be positive on the pharma sector. On the charts, if I have to bet on the pharma space, then which of the pharma stocks do you think that one should bet on?
Yeah, so talking about the Nifty Pharma Index, the recent low was made on 4th March when Nifty Pharma Index was 19,600 odd levels. Now it has reached about 21,000. So healthy pullback we have seen. And now the Nifty Pharma Index has reached the 50 and 200 days moving averages, exponential moving average, which coincides at the same level. So I think after a strong pullback, they have reached a resistance on the short-term charts. So there might be a case of profit booking here. So it is better to wait for taking an aggressive long view at this point of time, because after pullback, the underlying has reached to the resistance level. And amongst the pharma stocks, the technical setup of supply looks quite strong. So supply is one of the stock which we already have recommended to our clients. The another stock which I like on the chart is the Divi's Laboratory, which is looking stronger to me. So these two stocks can outperform in the pharma space.
The take coming in on pharma. In the meantime, going pretty strong right now. Bajaj Finserv, Chambal Fertilizers, Bharti, SBI Cards, Techem, of course, are the laggards today. But other than that, it's been pretty a strong show. Look at NCC, that's made a strong comeback today, 4% higher for that stock. IREDA has come back a good 5% over there as well. Adani Transmission, 1% of a move coming in there. And IIFL as well is going pretty strong, almost a 5% bump up is what you're seeing over here. Actually, what happens to, the market darling themes? Say, for instance, the entire capital market theme, wherein till the market began losing sheen or correction, you had pretty much the entire spectrum hold out well.
We kind of expect that theme to, not just capital markets, right? If you're just seeing the kind of themes that did well over the last couple of years, and these have been the themes that have kind of led the fall. So it's capital markets, capital goods, real estate, defense, digital. We kind of believe that these are really the segments where you are seeing higher and faster kind of growth dynamics. These are also going to be the kind of segments where you are likely to see the largest levels of value creation over the coming decade. If you're just looking at long-term growth rates, consumption has been struggling. IT is kind of struggles to grow beyond kind of low double digits, if at all. You have pharma, which kind of has pockets of growth, etc. We kind of believe that a lot of the longer-term growth is going to come from these themes. They had kind of run up probably well ahead of fundamentals, and the correction that you're seeing at this point in time are just kind of them coming back towards slightly more realistic valuations. One can argue that they still have a bit more to fall before they really truly kind of reflect underlying value. But given the fact that a lot of growth is going to happen in these areas over the coming decade, it continues to be a space that we believe is very attractive to be investing in. Perhaps you just want to be careful about the timing of the entry.
Point taken. But on that note, thank you so much, Ashi, for joining us on the show to give your take on the markets, how one should actually allocate and strategize in their portfolio, given the fact the way how the markets are moving. But all eyes definitely has been on one asset class, and that has to be gold, given the fact that we've seen a sharp rise in the gold prices, not only internationally, back home as well, and given the fact that it has surpassed the psychological level of $3,000 per ounce. But what does it mean for all of us here back home, whether it is an asset class that one should watch out for very closely? We spoke to Nilesha, who's the MD at Kotak AMC, hear out his view on the yellow metal as well as on some of the sectors that he's liking.
We'll have to figure out when Indians decide to sell gold, who will buy. Today, gold prices are up because we are one of the largest buyers. Fortunately for India, central banks of the world have become like our housewives. They have realized that keeping money in dollar, yen, euro, renminbi securities is risky, as Russian central bankers have realized. Now they have joined the bandwagon and they are buying gold as much as Indian housewives are buying. So yes, undoubtedly gold looks on a better footing. It has delivered great return like equity, but we'll have to realize whether we'll be able to liquidate gold or not. IT stocks, it's all about expectation. There was fear that US might be slowing down. The Google searches on US recession has increased. So we are probably looking at hard landing as well. That is direct impact on IT business. The second challenge is of technology. There are many IT companies which have significant exposure to BPO, and clearly AI chatbot are taking over BPO jobs. Even programming is not far off, and there are worries that AI related programming could take away many of the programming jobs. Undoubtedly in IT, there will be two kinds of companies. One which leverages AI to deliver better, cheaper, faster solution to customers. Now, if you are a large behemoth, to turn around a tanker is likely to be a bit difficult, but to turn around a speedboat might be easy. We have been bullish mid and small IT companies which are leveraging artificial intelligence, which has limited or no exposure to BPO. And we believe these companies should be able to gain market share as they provide better, cheaper, faster solutions to their customers. Valuations have undoubtedly corrected, but they are still relatively high. For example, in defense, there is a great opportunity in exports market. But how many companies have technology that they can cater to exports market? How many companies have capacity that they can cater to exports market? How many companies have products which are futuristic in nature? As we have seen, the war scenario is changing. $100 million plane or a tank can be easily destroyed by a missile or a drone. So clearly in defense, companies which are catering to local as well as global market, which is futuristic in terms of their product profile.
Well, all right, that's the word coming in from Nilesh Shah. But let's take a look at how we have wrapped up in today's trading session. And not only stellar gains, we are closing at the day's highest point on the benchmarks as well as the broader markets as well. Nifty up 1.5%. What a solid intraday coming in from this group of stocks today. 22,846, 850 thereabouts. Remember, at one point of the trading day, we had slipped below the 22,700 mark as well. But look at that recovery from the day's lowest point on an intraday basis. It's a 340-point uptick coming in on the Nifty 50. Sensex 2 in tandem with the Nifty, a 1.6% uptick coming in on the Sensex as well, looking very solid, above, firmly above the 75,000 mark for Sensex right now. Nifty Bank also the real outperformer in today's trade, a 2.1% uptick coming in. Very stellar performance coming in from both private as well as public banks. banks. Advance decline ratio very much tilted towards the advances, in favor of the advances. India weeks also cooled off quite significantly in today's trading session, and looking good is the India weeks as well. Let's pull up the broader markets because Nifty mid-cap and small-cap indices, both of them at their day's highest point individually. A 2% uptick coming in on the mid-cap index and almost a 3% uptick coming in on the Nifty small-cap index today. All of these are almost at the day's highest point and looking rather good. Only 3 stocks that are ending in the red today from the Nifty pack: Bajaj Finserv, Bharti Airtel and Tata Mahindra. Of course, Bajaj Finserv, the stock of the day in focus on the back of that Allianz acquisition. But you have ICICI Bank, M&M, Shriram Finance, L&T, Tata Motors, all trading with gains of 3%. Tata Motors, of course, on the back of that news flow that they will be initiating price hikes for CV and PV segments of their vehicles from April of this year. Other than that, NBCC, Ircon, RITES, all on the back of Auto Win, Star Cement, AB Realty on the back of a new launch, Areda on the back of fundraising, Vedanta on the back of the chairman's letter, HUL on the minimalist acquisition, the CCI nod, Paytm on the back of the Paytm Money getting a SEBI license for becoming a research firm, LIC on the plans of health insurance foray, and Varun Beverages on the back of a very solid City note coming in. All of these stocks have done very well in today's trade, but that's how we're wrapping up at the day's highest point. Absolutely no complaints from the trading day that we've seen today. A 1.5% uptick coming in on the Nifty, and that's how we're shutting shop for the day.